gentlemen, you're listening to the weekend edition of the Korelin Economics Report. As I've said ad nauseum, this entire show is being recorded here at the Cambridge House Investment Conference in Vancouver, British Columbia. Corey and I have one of our favorite guests, regular guests with us right now, John Kaiser. John, I'm sensing a turn in the market. What do you think, bud?
We have been in an inflection from a 3-year relentless decline since tax loss selling ended about December 23rd. On Friday, this inflection started to become visible. I think we are now in a selective bull market. It's going to be a long bull market for the resource sector. It's not going to be a V-shaped recovery, but the worst is behind us. We have a battlefield where the survivors are now starting to stand up, and the number of people here at this conference is telling me that the audience is willing to come back and back the obvious or the winners for this next cycle.
John, I have been quite impressed with the attendance at this conference. It's much busier than, I would say, any of the conferences we went to last year, maybe except for the Casey conference. But it really shows a renewed interest, not only from maybe the institutions, but also the retail audience. And I know, or I believe, that we need the retail investor to come back. But I know you have some comments on how we can get the retail investor back into the industry.
Well, one of the unfortunate things about the past decade is that the retail investor has been banned from putting money directly into treasuries because you need to be worth $1 million, not counting your home, to do a private placement. And 95% of the money raised by Resource Juniors has been through private placements. But the institutions are gone because metal prices aren't going anywhere in a hurry. And the accredited investors, they are reluctant because they don't see the aftermarket anymore. The retail investor has become alienated. And the regulators have put out for comment a proposal that would allow non-millionaires to put up to $15,000 per company per 12-month period into it through a private placement with the usual warrants and flow-through benefits and stuff like that. And I think if this gets adopted, this will enable the people here to not just be recipients of paper sold by short sellers and existing shareholders, but they'll actually be able to put fuel into the tank of these companies, because we're heading into a discovery type cycle again, where it is extremely high risk, and the retail audience loves high risk, high reward.
Retail audience does love high risk and high reward. You know, I know that our colleague, your good friend, and my friend Joe Martin is behind an organization that is lobbying to get this through. Tell us a little bit about that organization, would you?
The organization is a group of various industry people. I'm sort of part of it, and they've identified that there are a lot of legal obstructions in that which are preventing capital from flowing into the companies. And when company has capital, an awful lot of it flows away just for regulatory compliance. And they're trying to sound the alarm and say this sector is being choked to death, and unless some changes are being done, there will be no Canadian junior exploration institution 5 years from now.
John, I want to focus back on this new exemption that you're talking about from the venture exchange, where people now can invest in companies in private placements without needing to be called accredited investors, which has been really handcuffing to a lot of these companies because it did limit the number of people that could put money into these companies. And the real benefit the companies get is when they raise money, they actually get to spend it. When you buy stock on the open market, it's not going to the company. So the company really is not benefiting. They do benefit from a higher share price because then they can raise money, therefore less dilution at a higher price. However, this almost seems like another grasp of the junior market, because as we saw in 2013, they allowed rollbacks 10 for 1 without shareholder approval for a little bit, and they also allowed companies to raise money at under 5 cents. Do you think that this opportunity to attract new investors that weren't able to take place in these private placements before will prove to be more successful than these prior two attempts?
Well, these other things like doing rollbacks, that's just cleaning up a mess from before. This is post-rollback. And I think that there's a lot of pretend companies out there, companies run by people who are very good at promoting and telling a story, but they cannot generate a story. There's a small group of prospect generators who are suffering now because there are no juniors to farm the prospects out to. If they pass this, the juniors, which reorganize themselves and still have reasonably competent management, but not so strong that they can generate their own prospect, they will go back to the prospect generators and say, we can now option the prospect. You present the story, all the graphics, the reasoning, why this is going to be a big target, and then we will go to the retail investor and put together these $15,000 financing so that we can drill that high-risk hole to prove the theory that you are proposing. So that'll bring a lot more vibrancy back into this sector, I think.
You know, John, I've been in this business for about 35 years on my own, even longer when you count some prior work that I did working for another consulting firm. And I think the industry has been over-regulated of late, specifically in Canada. You know, when you look at what's going on in the United States right now, and we were involved doing regulatory work for the majority of those 35 years, so, you know, it's not like I'm just talking off the cuff right now. When you look at some of the issues in the United States in terms of raising money, as you're talking about, and you look at how it was handled there, how it's handled here, much more difficult up here to do what you're trying to do than it has been in the U.S. I think it's an interesting commentary, and I'm not quite sure why that's the case.
I think the United States has a very protectionist system with regard to its citizens. The Canadian banks are pushing for the same thing. They're literally trying to create a rocking chair nation in Canada where they have complete control over all your assets. They manage those assets, collect their 2% plus whatever participation in the upside, and they don't want you to do any individual trading anymore. It's a completely control freak mentality, and they are picking on people over 65, over 55, and saying you guys and gals are not competent and shouldn't be trading any of this stuff. They're literally trying to kill the junior sector by making it extremely difficult for brokerage firms to execute trades that are unsolicited, because it's now unsuitable to own a high-risk junior. Ironically, it's not unsuitable for a poor person to buy a lottery ticket which has next to zero chance of actually giving anything back to that individual except a false hope. And that's an abomination in this country here. And in the United States, of course, they have a similar type of attitude.
John, from an investing standpoint, we don't have much time here left. If this does move through and really the market opens up for these juniors, is it the juniors that'll benefit the most, or do you think it'll flow to the mid-tiers? I don't think large cap.
What's happening now is the cleanup cycle. We had the super cycle takeover bids 2005 to 8, the gold bug cycle 2009 to 2013. Now we are seeing private equity, bigger companies cleaning up all the advanced projects. Osisko is an example. It will probably disappear, valued $2.5 billion to $3 billion in the next while. The people behind Osisko and all their shareholders will be cashed up. There will be no deposits. It's going to be back to exploration. Having this change come in will help with the mobilization of capital for discovery exploration. That's the next cycle, discovery exploration.
Definitely hope that's the case. Stick around. Corey and I are going to be right back.